Thank you so much for making time this afternoon and talking to us about the fantastic work you folks have been doing for a little over a decade and a half now, right? And really, the um front runners in what can be called as affordable credit. And taking this to rural India, I will stop speaking now and open the floor to you. Folks who are joining us for the first time, we will have Smita Ram, the co-founder of RangDe, talk to us about some of the experiments that they've tried around taking affordable credit to women, largely in rural India. She'll talk about for about 25 to 30 minutes or so. We'll then open the floor for Q&A. But if you have questions in the interim, please use the chat box and park your questions there. Smita, over to you.
Thank you so much, Supriya, and thank you everyone for joining in. Um, like Supriya said, we've been around for close to a little over 16 years now. We've had two parts to our journey. Rangde was initially registered as a non-profit when peer-to-peer lending was unregulated in the country. In 2019, we had to take a break and restart Rangde as an NBFC P2P when RBI came up with regulations for peer-to-peer lending. The one common thread, in this entire journey has been our purpose and mission of making credit both affordable and accessible. So today I have a few slides. It's a very informal session. I'll walk you through what we've been up to at Rangde, how the model has evolved in the last 16 years, and how we have tried to remain true to our purpose despite all the ups and downs and the roller coaster of a ride that we have had. I think I should be done in about 20 minutes and then we can answer any questions that you may have. I'll just share my screen. Yep, is my screen visible? Okay, awesome. So, yeah, starting off with the problem, I'm sure all of us are familiar with this problem. If we are not, even till today, only about 12.8% of India's eligible population has access to formal credit. Where it is accessible, there's still several challenges around costs, around access, around agency, and that's something that we are trying to solve. And our focus is mainly on rural entrepreneurs. That's why the emphasis on Bharat, rural entrepreneurs, farmers, and artisans. And this hasn't changed in the last 16 years. We have also realized that while we started solving for cost, saying that credit is very expensive for underbanked communities, how do we make it affordable? As we started to go deeper and untangle this problem, we also realized it's not just the cost, it's also the entire service design of how credit is being delivered that needed to be examined. So that's been our quest in the last several years. And the one big area, which kind of leads and augments this problem of exclusion is lack of data, right? A lot of individuals who are underbanked, who are new to credit, are denied credit from formal financial institutions because there's no credit for underwriting, because of which either credit becomes super expensive for them or they're not even welcome in a lot of financial institutions because of this. So what Rangde actually does is kind of helps people who are new to credit build their credit histories because of the unique model that we have built. So quickly jumping on to what we do, we are actually a social investing platform. Uh, we are regulated by RBI because we are an NBFC P2P, but then the model that we are trying to promote and the product is social investments, because what we enable is individuals like you and me to invest in fellow Indians. So on the platform, you'll actually see curated individuals from across different states, mostly farmers, entrepreneurs, artisans, like I mentioned, who are seeking credit to actually expand their livelihood activity or start up something. So we essentially do either seed capital or capital to expand their ventures if they've already started. So different kinds of initiatives to actually help people enable livelihoods. Sometimes it's for them to build their own livelihood. Sometimes they're on the path to actually creating more jobs for other people in the rural economy. So three key stakeholders. One is individuals like you and me who lend money through the platform, who we call social investors, because the emphasis is really on enabling livelihoods and creating an impact. You do get a return of around 8 to 10%, but the focus is really not on that. The focus is on the impact you're actually enabling. We want to make sure that the narrative is really strong around social investing. The other key stakeholders, of course, are borrowers who we call investees who receive credit through the platform. For them, RangDe is access to an affordable, regulated credit platform to actually start their formal credit journey in some sense, if I can call it that. A very important stakeholder in the model is our on the ground partners who we call impact partners. And the impact partners could be government programs, they could be social enterprises, they could be non-profits. But the key thing, the most important part in this is that they should be involved in a livelihood activity or in a program. So we actually design our loan products to serve the livelihood needs of the communities. So, what is the unique model? One of the things that we really believe in is credit alone cannot create that impact. So, on the ground, when we identify impact partner organizations, we ensure that all the critical to success interventions that this individual needs to succeed are actually provided either through the partner or several partners working together, because that is what actually creates that sort of an ecosystem for that individual to succeed. Think of it as a startup, right? When somebody gets an investment, the startup doesn't just get capital, they also get access to mentoring, they get access to markets. There's a whole lot of support systems that are actually provided to the startup, and we want to ensure that the same kind of support system is available for the rural entrepreneur or the farmer. That's where the choice of this impact partner is extremely important, and that's what I mean by on the ground incubation. So our credit program is actually built on top of an existing incubation model of the impact partner. I'll answer more questions on this once we get into the Q&A. So, quick snapshot of what we have done as a regulated entity. We have disbursed a little over 82 crores. We went live in September 2019, and soon after we went live, we hit the pandemic. But that was also a time for us to validate our business model as a for-profit entity, and some great learnings from there, which actually helped us build a very strong foundation for the model. About 72% of investees we fund on the platform are women. 52% of them are first time borrowers. What I mean by that is people who have never had any credit scores or credit histories. And Rangde's journey with Rangde actually helps them build that credit score. So moving on, so what happens from a social investor's point of view, an individual who wants to lend through the platform can actually choose a particular state, a sector, or a fund that they want to invest in. They can also choose an individual that they want to invest in. And once they invest, they actually start, in some sense, connecting with this individual or a program that they're a part of. Through their dashboard, they can track the impact they're able to make. They can also track the returns that they've actually received, and they can either reinvest this or withdraw it. So it's just like everything is on the platform. It's a radically transparent platform, and curated sets of individuals from across different communities would be available on the platform for investments. So that's what the social investor gets. Something that has been core to our methodology right from when we were a non-profit are three aspects. One is agile. That's something that really sets us apart because we are able to really design loan products, design interventions that really work for the community, either for the or community of borrowers or community of social investors. And this agility comes from the fact that we are a technology platform, and designing different loan products, all of this, underwriting, all of this happens very seamlessly because of that. We're also very rooted and human centered because all interventions that we design actually is built ground up. So a lot of feedback that we receive from communities, from our partner organizations actually helps us in evolving, making sure that our interventions are better and it's actually working for the communities. This is something that we take really, really seriously. And purpose built, like I said, While we are an NBFC P2P platform, we are purpose built to ensure that credit remains affordable and the cost of regulation or the cost of compliance doesn't really burden the borrowers, right? Because it's very easy for something like that to happen, but that's something that we are very careful about, be it while designing our business model or the choice of partners or the interest rates that that are created for the loan products that are given to the borrowers. Our expertise. So, while we are a lending institution, our core focus area is really to address financing gaps, right? Because on one hand, there are microfinance institutions, there are small finance banks, there are other fintech players, there are a lot of other government schemes through which credit is actually available. But despite all of these players being there, there are several communities, several individuals working in value chains, certain regions, communities, they are actually left out due to various reasons. So what RangDe does is, and this is what our expertise is identifying where these gaps are and the reasons for these gaps, and then designing loan products interventions in a way that these gaps are actually addressed. So we want to make sure that RangDe is not their only lender, but we want RangDe to become the first lender for anybody who's actually been denied credit. And once we have offered credit and somebody has a great repayment track record on the platform, their choice, their world of opportunities just opens up, because suddenly from being, not credit worthy, they have a credit score for the very first time, which actually enables them to get access to credit from various other financial institutions. So I'm touching more upon what we do on the investees side. Our promise and commitment to them is on the three A's: access, affordability, and agency. And how do we actually go about doing this? When it comes to access, like I said, we are a very inclusive platform and ensure that people who have always been denied credit get access to credit from RangDe, be it entrepreneurs with disabilities who were denied credit because of perceived risk, or entrepreneurs in the Northeast because local financial institutions shy away from lending from them. We, like I said, welcome first-time borrowers. And the other important aspect, which I also touched upon, is working with partner organizations to ensure that people are not left to fend for themselves, and there's that support system that is available for them to thrive and succeed. The other thing which is very unique is our credit underwriting model is based on alternate data. How do you actually ensure, we are able to do credit decisioning for individuals who don't have a lot of data? That's where we use a lot of alternate data. And thanks to our track record of working in the last 16 years, we have a lot of data about not just demographic data, but a whole lot of other data which we are able to use now. And we have created custom scorecards at a partner level, at a geography level, at a certain value chain level, which actually helps us and gives us the confidence to go ahead and work with underserved communities. Affordability, I'll talk more about this in the subsequent slides. We don't have a cookie cutter approach to designing and creating loan products. I think the last time we took account of how many different loan products we have created, it's more than 50 different loan products and initiatives that have actually been created, because we understand the diversity and nuances that are involved in various occupations and livelihoods. So clearly a one size fits all model doesn't really work, and that's where we really focus a lot of our energies on. Interest rates on the platform are actually regulated. We have a very strict pricing policy. We have capped the interest rates, and interest rates on the platform never go beyond a certain rate for the communities. We have also decoupled our own profitability and sustainability from the interest rates, the interest that the borrower pays. As you can imagine, a lending institution has only two ways of getting profitable: either do more and more loans, or to keep increasing the interest rates, right? That's what typically happens. But by decoupling our own profitability and sustainability from this and thinking of an alternate business model, we have been able to ensure that the interest that the borrowers pay remains affordable. The last aspect that I want to talk about is agency. And what do we mean by agency and how are we defining it? We want to ensure that at all points, our borrowers, especially the women we work with, are able to take control of their lives and take charge of the decision making, be it with regard to their financial health or otherwise. And we believe that, access to credit and their journey with RangDe is really the starting point. And in order to ensure that, there are certain initiatives that we have designed, and I'll talk about two of these initiatives in the next few slides. One of them being, the choice architecture. What actually happens in the, traditionally with regard to rural credit is individuals do not have a choice or a say in the kind of loan products that they really want to take, right? It's usually the lender who decides based on, certain risk factors or based on the profiling of the individual borrowers. The loan product is really designed by the lender. But in our case, we've actually flipped the model and it's kind of co-created. This is designed based on what is the occupation of the individual, their cash flows, the affordability, their family data. A lot of this actually goes into creating that scorecard, and we provide options for the individual to decide, what loan product would actually work for them. The other aspect is, how do we proactively ensure borrowers are getting financially literate? So tomorrow, if RangDe does not exist, the borrower still has the ability to decide what is right for them. And towards this is our financial literacy program. It's actually a flagship program called Swabhiman, which is digital and it's also adaptive. It's very locally contextualized depending on where the women are and what their previous experiences have been with regard to financial services and products. So quickly we'll delve slightly deeper into these aspects. What do I mean by choice architecture? So I've just given certain personas of borrowers and investees we have worked with, smallholder farmers. One of their key pain points is they do not have the cash flows to actually make monthly repayments or weekly repayments, right? So if they've taken loans for inputs, they'll only be able to realize the value of it after they've harvested. So in our case, we're actually able to design a loan product in a way that, there's just one bullet repayment at the end of the, loan tenure when they have actually harvested their grains and they have cash. We also do post-harvest credit in order for them to access warehousing and hold on to the crops until, the prices have gone better for them to actually sell it. So these are some of the interventions we are able to do. Similarly, in the artisans and weavers, in the craft value chain, the unique requirements that people have need different loan products. We can't really have like a one size fits all model. So these are some of the examples. Nano entrepreneurs have better cash flows, more frequent incomes, but they do not have access to affordable credit. Usually they end up paying really high interest rates to a wholesaler or a distributor, and they double up as the middleman as well as the money lender in some sense. So these are those gaps that we are trying to address, because what happens is, despite the fact that they're in a livelihood activity, because of the high interest rate loans that they actually receive, they're not really able to make a lot of earnings at the end of the day. That really helps in the persona based lending actually helps in designing loan products that are really right for them. Just talking a little more on the weavers front, and an example of a partnership. We work with an organization called Kharge Wale. They're based in Maheshwar. And as many of you would be aware, Maheshwar is also known for its exquisite weaves, and there are several weavers there. A big problem there is some of the master weavers who are also who also outsource work to other smaller weavers and artisans, end up being money lenders and lend at really high interest rates. So now with the partnership with RangDe, Khargewale is able to really reach out to weavers and help them transition into master weavers and create jobs. The missing bit was actually access to working capital on affordable terms, and that's where RangDe is playing a role. This is actually one of our weavers who's now, from being a weaver, she is now a master weaver, and she also employs other people in her crafts enterprise. So looking at, where those opportunities are, where credit with the support system and interventions provided by the partner can actually play a pivotal role in transforming lives. Okay, moving on to Swabhiman, and we all know of financial literacy and we understand the importance of it. When we were launching Swabhiman, we realized that a classroom sort of a financial literacy will not really work for women in the community. One, they didn't find relevance to it in their own lives, right? Until that learning has some relevance, getting people to attend a training program would have been extremely difficult. We did some baseline studies and surveys and realized that nobody was really interested in attending a classroom sort of a situation. And because of so much of microfinancing that already existed in the community, the first question people would ask is, how much are you going to lend? What's the loan you're going to give me, for how long, and those kind of questions. So when we started Swabiman, we actually flipped the model, and we actually told them that we are not here to lend, but we are actually here to learn something from them and also share with them the knowledge that we have. And because if finding an individual, training that individual, would all of that would be a challenge in terms of ensuring quality, we actually use the good old bioscope and gave it a digital spin. And this was actually our financial literacy kiosk. So women could actually come here, and you will actually see a small slot here where people could biometrically authenticate themselves, and that would open up various modules on financial literacy. All of these were videos in local language that people could actually access. So they could access it through these viewfinders here in the bioscope, and they could also take an assessment, which was a KBC style quiz. And all of this could actually be done even by a semi-literate or an illiterate woman once she was actually assisted to take this once she was assisted to use this infrastructure. So this is an example of how somebody was actually using this, and through this we were able to notice some very interesting changes in this community, where I already mentioned there were quite a few microfinance institutions that was lending to them. And the behavior that we noticed when we went there was everybody wanted a loan, and they wanted it now, without really thinking of, do I really need it now? If I need it for my child's education and the college is starting in June, why would I borrow in December? And what am I going to do with that? But people were left with no choice because of the fear of missing out, right? They would feel that if I don't avail the loan right now, I'm not going to end up getting a loan. So they will end up taking it and using it for something else. So once we launched this financial literacy program, we actually saw how things changed. We saw how amounts that people wanted in as a loan amount changed. Initially everybody was like, oh, I need a 20,000 rupee loan, I need a 25,000 rupee loan, and usually whatever the neighbor said was the amount that I needed. I never really thought about, do I really need this? So once the program was launched, we saw a change in the way people were actually asking for their amounts, because they started to contextualize it and see, do I really need this? The second thing they started to do is plan when they actually needed this loan. They realized that the loan is not something that they need all the time, and they can only take it based on the needs. This is something that we actually did. We had quite a few centers before the pandemic, or Swabiman centers. Now we have taken a lot of these learnings from running these Swabiman centers, and this is something that we implement across all our communities before they actually get access to loans. Another big part of our work is listening and co-creation, because we believe that there's a lot of information out there in terms of insights, in terms of knowledge that the community has, but there's nobody willing to listen to them. So we spend a lot of time on the ground rolling out products, testing it out, getting feedback, doing focus group discussions to understand that what we are designing also works for them. And the other thing that we do is any new program or any new intervention that is designed for women is first tested as a pilot. We launch this in a few areas, get feedback, and then decide whether or not to scale up. So some of these aspects and knowledge that we have built over the years actually helps us now in ensuring that we are closer to the community and design what they actually need. Yeah, that's about it. Happy to answer any questions that you may have. I'll stop sharing the screen.
Thanks, Smita. Very, very helpful, folks. Any questions? You could unmute. Come. Hey, Misha.
Hello, hello. Hi, Smita. Thank you so much for your talk. My name is Misha. I work with Dwara Research. Have a couple of questions. So firstly, can you tell us a little bit about how is credit risk assessed for this segment? Since you mentioned that they are typically new to borrower segment. So
Yeah.
does RangDe do the credit risk assessment, and how does that process unfold?
So what we have done, Misha, is we've actually developed scorecards now. And these scorecards, were tested. First, these scorecards were developed manually. Now we are actually integrating with an AI-based platform to automate the whole thing. The scorecards are actually developed at three levels: at the partner level, at an individual borrower level, and at a region level. And the credit risk of the individual is actually derived from all of these three different scorecards. And that's done only the very first time somebody actually takes a loan from the platform and we don't have their credit score.
These partners are typically NGO organizations, right?
Not really. They can be for
Oh,
profits, they can be government
oh.
programs, there can be a state rural livelihood mission program. So we are agnostic to who the partner is.
Oh, understood. And I think also the financial literacy module was quite intriguing. You spoke a little bit about how advice is given in terms of, thinking through what the loan amount should be and whether the household needs the loan or not. And I found that quite relevant in today's context where there's a lot of talk about, over indebtedness as well among a proportion of this segment. So was wondering like if the financial literacy module is available online on the website, and as researchers, we would really be interested in looking at that and seeing how practitioners on ground are thinking about financial literacy. Or could you
Uh,
give us a little bit more flavor of that?
it's not available online, so I can give you, I mean, I can share details of it separately, Misha. So there are two parts to it. One is, of course, the curriculum, but the important bit is the curriculum and the content is actually customized based on experiences of the community. For example, in Chhattisgarh, when we actually launched the first center, we realized in our, conversations and our baseline surveys that people had actually been duped by a lot of chit fund companies. There was a lot of ATM frauds where debit cards of people had been taken away because they shared the PIN code. So there was already a lot of negative experiences around it. So we anchor our content around existing experiences of people and then build a financial literacy model. So there are core modules that of course remains uniform across everybody, but our starting point is really experiences of the communities, and then we look at building that part as the first bit. But the second important bit apart from curriculum and content is the user journey. So that user journey has a lot of behavior nudges in it, be it a behavior scorecard or leaderboards or dashboards that we have for the community. So all of that actually helps in reinforcing behavior and ensuring that people come back to learning because they're now finding relevance of the training in the program. So these two parts at both put together is what actually works at the community level.
Okay. Sorry, Supriya, one more follow-up question. Would that be okay? So Smita, when you talk about behavioral scorecard, leaderboard, dashboards, just a follow-up, is that more about, okay, these are the suite of formal financial products that you should be having as a household, or
So we don't do
is it
any
centered around a product, or?
So we don't do any advice around product or services at all, Misha. It's really about certain expected behaviors in the user journey. For example,
Okay.
using their bank accounts regularly could be a criteria. Have focusing on saving. So these are certain things that would be outlined as expected behaviors. The scores would be around those behaviors. We don't do any advice around products or services at all.
Okay, okay, understood. Thank you so much.
Thanks, Misha. Tanuja, you have a question. Do you want to ask that yourself? Okay. Please take care, Tanuja. I will. Smita, you have the question also in front of you on the chat board. Um, Tanuja,
Uh,
yeah.
Okay, so I have a question on the sorry, one more question came. Yeah, in spite of investors receiving returns, um, so the returns are not the primary focus, Tanuja, because our loan products are customized, right? And it's diverse. In some cases, an investor can get up to 8%. In some cases, they can get maximum of about 10%, but in some cases, it can be less as well. So we do not want returns to be the motivating factor to for somebody to come to the platform. Also because of the kind of communities we are working with, and yeah, so that's the main reason. And if somebody is hoping to get returns, I think there are several platforms there, and they can invest in the markets. But RangDe is not really the platform where the focus can be only on returns. The idea is also to see how can we actually bridge the empathy gap between urban India and rural India. So it's a lot about connecting with individuals, programs that people are actually investing in. So I would say it's a balance of the two, and that's why social investing, it's the impact as well as the returns.
Great. I see Akhila also has a question. She's from Human Ventures and checking if you folks would like to work with them.
Oh, yes, of course. You can just drop us an email, Akila. We just have like a process in place for onboarding partners. Would love to explore and see if we can work together.
Yeah, so if I may, can I just take a minute? Yeah. Yeah, so we at Human Ventures are basically an agri fintech, and like we all work with the rural community. We also work with the rural farmers, and we are a gender focused organization as well. So while we work with the farmers on the ground, the male farmers, as you know, have the majority of the land holdings, and they are the cultivators basically. The females are not exactly the landowners, so we also work on alternative occupation for them. So we also concentrate on the family economics. Like we urban people, like when we take a housing loan, we all pool in our EMIs together, and then we take a combined loan. So we are working something on those lines. So we will be very happy to explore opportunities wherein we would want to see how if they can help us going forward. So we would really like to schedule a separate one-on-one interaction, Smita, as per your
Absolutely,
suitable timing.
Akila. You can just
Yeah,
drop me a note. I'm on smita@rangde.in, and then we
sure,
can.
definitely.
Yeah,
Yes, yes, yes. Thank you so much.
thank
Thanks,
you.
Akhila. Devyani, do you want to ask your questions yourself?
Sure. Thanks, Smita. Just a quick one. I think I saw on your slide, minimum investor or lender ticket size was 10 lakhs. Did I read that right? And where do you typically acquire lenders from? So how do you build that side of the platform?
So actually, it's the maximum ticket size of 10 lakhs for a lender. This is actually regulated by RBI, so we do not have a control over that. A lender can lend up to 50 lakhs with some additional documentation, but yeah, these are just regulations
Got
by
it. Then I
RBI.
read it wrong, sorry.
Yeah.
And just related to that, before you had a formal P2P NBFC entity, were first-time borrowers still getting credit scores?
No, they
Uh,
were not because we were an unregulated entity then. We would still, the focus was always first-time borrowers, but we were a little helpless then because of the fact that we were an unregulated entity and we didn't have access to the credit bureau data. So it's only now that we are able to do this. So just one of the silver linings of being a regulated entity.
I have a couple more, but I'll let others ask and come.
Sure.
Ranjana, you had a question as well?
Yes, let me try and see if I can switch on the video. Yeah, hi, Smita. Very insightful, some amazing work that you're doing. I'm Ranjana from Mera Bills. We are a social enterprise. We have an app, that's into digital bookkeeping for, targeting women micro entrepreneurs. I was just, I had a question related to my domain specifically. Do you have any, in your Swabhiman project, do you deal with bookkeeping for, the investees? Do you teach them bookkeeping too?
Not specifically, Ranjana, because most of our partners actually take care of, helping them, or the partners also run their own financial literacy programs. And because they're incubating livelihood programs, they end up, training them on bookkeeping. In Swabiman, the focus is less on, some of these aspects like, you need to do this and stuff like that, more to help them realize the importance of it. So we do have modules on bookkeeping, but we stop short of saying you need to definitely do this. So it's less prescriptive, more in terms of them realizing, oh, this is important, how do I go about doing this? Then they speak to the partner and they get a little more interested in doing it. Otherwise, partners just end up saying, oh, this is important, you need to do it, you don't have a choice, sort of a thing. So we just stop short of doing that and see what would it take to encourage and inspire women to realize this is such an important aspect of my business and I really have to do it.
Yeah, thanks for the answer, Smita, and I'd like to connect with you offline too.
Oh,
And
sure, absolutely. I'm just leaving my email ID here, so
that'll
would
be
love
great.
to.
Thank you so much.
Yeah, that's me.
Any other questions? I know Divyani had a couple more.
If if
Go
we have
ahead,
the
Divyani.
time to it, I'd love to just ask a little bit more about the business model, particularly in light of, the recent RBI guidelines on P2P lending. Did that affect you in any way? And you mentioned that you've managed to kind of de-link the spread on lending and, from your sustainability so that the borrower still gets an affordable loan. So what else are you doing to complement or to stay viable from
So
a
Devyani, the
business?
recent amendments, that happened in August didn't really affect us because our business model was like this ever since we started in 2019, where we felt that the way the regulations were designed is as a P2P platform, we do not lend from our books. We are only a platform that connects lenders and borrowers. So we felt that, a model, revenue model should also be that of a platform and not that of a lender. So we have a platform as a service model where we charge a fee to the lender, we charge a small fee to the partners who partner with us. So we have a fee-based model, and our revenues don't come from the interest that the borrowers pay.
Got it. But it's fees on the loan, right? For
No,
the
it's nothing to
borrower.
do with the loans.
Okay, it's just for
That's where the
registering
decoupling
on.
happens. Yeah. The borrowers don't pay us at all. They only pay us a processing fee. That's the only charge that is linked to the loan. But otherwise, the lenders and the partners actually pay us a fee.
Ankur, I see a question from you. Is it on the same lines that Smita's talking about?
Hi, Smita. Part of it is answered. I have been studying some models of, arrangements like these on ground. I was trying to understand if there's a revenue sharing arrangement or is there a technical grant assistance from some philanthropic source to get it started. Just any thoughts there?
Some of the partners may have it, Ankur, but RangDe doesn't. The partners may have it, considering that we're working on large livelihood programs in some cases where RangDe is the financing partner. So their livelihood incubation programs may be grant funded. It could be a BMGF or it could be any other funding organization that's funding it. But where RangDe comes into play is after all the incubation and when the ventures are almost ready to go live, somebody needs to fund that seed capital, and there they don't get access to affordable credit. So it's that piece that we're actually plugging. And then of course, once the investees find value in the work that we are doing, they tend to stay with us. And like I said, once they've taken the first few loans, the world is at their doorstep because they can actually borrow from anywhere after that. It's left to them. The choice is entirely theirs if they want to come back to RangDe and continue to borrow from us. But I have seen in a lot of cases in UP, in northeast of India, where institutions there had refused to lend to them are now offering them credit on really good terms, which is something that's very, very heartening for us. So the partners program, some part of it would be definitely be grant funded, but that's more the incubation support that is required on the ground. For RangDe, it's just what we raise on the platform.
Makes sense. May I ask another question? Um, so you talked about, bringing on board new to credit customers and persona-based lending. I expect it would have been a lot of work digitizing a lot of these credit assessment systems by personas. How many personas do you have? How scalable is this across the rest of India? Just some
It,
thoughts there.
So our personas are actually defined based on the operating models that are there and the value chains. So that's like two, common threads across all the personas. But right now, creation of a loan product is not, is no great, effort for us just because it's a digital platform. And I'm able to say this now because now we have a lot of that data on what works, what does not work. And I think, having that experience of being an unregulated entity, but still having a lot of data about our customers, what had worked, actually helped us in developing those initial scorecards that we had to do. So now everything is digitized. So yeah, but even earlier it was an online platform, so we had a lot of that digital data that was still available with us.
Right. I'm curious about how this data maps with capital flow corresponding to value chains, but maybe I'll take that up separately. Maybe I will also reach out.
Sure, absolutely.
Smita, I have one question, and in fact, I heard Ankur talking about that as well. How are you thinking about scale from here on? And are there any foreseeable barriers to scale? Any thoughts on how are you going to tackle them?
I think the biggest challenge, Tanuja actually spoke about it on, she mentioned that we are not talking about returns, even though people do get returns, right? And that's mainstream understanding of investing, that you are actually investing for returns. So I think for us, the biggest barrier is how do we make social investment actually mainstream? So that is something where we are actually focusing a lot of our energies on. And the demand side is something I think we have a lot of expertise in now. But what we really need to solve for is the supply side.
Got it. We are also very, very close to the end. Folks, if there are no more questions, we will thank you. Thanks, Smita, for sharing the fantastic work that they've been doing. All right, I am assuming no questions. Thanks, Smita. Thank you so much for
Thank you,
joining us.
everyone. Bye bye. Look forward to staying in touch. Bye bye.
Bye.